Hey everyone, welcome back to another episode of Weekly Options with Artie. My name is Artie. I'm one of the moderators at our community, Bear Bull Traders. So if you remember, you probably have seen me. If not, you only follow us on YouTube. Welcome. Today, lots of stuff has happened. Very volatile week in the market. We're gonna basically let me walk you through our agenda. We're going to discuss the week. We're recording this on Thursday. We had a FOMC meeting, so lots of volatility in the market. We'll talk about Fed's meeting. Fed obviously increased the rate by 25 basis points. What does this mean for the market? I'm going to take a look at some historical events that has happened when Fed is tightening and what that means. We're going to look at the VIX Term Structure. So this is something we introduced last week. We're going to compare it to last week. Very interesting stuff, and kind of see whether or not the market has kind of bottomed, at least for now. If the bottom is in, then we're gonna look at some trade idea generation, maybe going into next week, going into next month. We're gonna look at housing. How's housing doing? We're gonna look at China. Really great opportunities, I believe, are kind of building up in those sectors. And of course, we're gonna do a recap of my trades for last week and some of the trades that I've set up going into next week. So if you wanna kind of carry on and set those up, hopefully you can as well. So very, very busy and packed session today. Hopefully you enjoy it. If you got questions, leave it in the comment section. I monitor them really closely and try to answer them. And of course, feel free to subscribe to our channel. Let's get into the market and the FOMC meeting. So, I asked this in my Twitter account. If you don't follow me, make sure to follow me. If we've bottomed in equities, and majority of people on Twitter, and I asked this on Wednesday, right around FOMC meeting, is a lot of people said nope. There's going to be more pain ahead. So about 72% of people think we're going to come back and test the lows again. So it'll be interesting to see. People on Twitter are a little bit more bearish, but let's actually go ahead and look at the sectors. Very strong day. Today's Thursday. We're seeing this kind of trend, upward trend, moving again, really strong. Same story in the Qs. IWM, who's been lagging, is kind of leading the way, 1.5% higher. Really a strong day again for IWM as well. VIX now below 30. This is the third day in a row that we're below 30. What does this mean for the market? We'll talk about this, but this is really important as well. A skew is now at 132. We're getting closer to that 140 to 150 skew, which is, as you remember, I said it's actually quite bullish, because that means a lot of out of the money puts are being bought out, which means people are not worried about imminent sell-off. They're more worried about black swan events. So skew is moving upward, WIX is moving downward. Definitely things are starting to look a little bit healthier. In terms of our sector performance, let me go a little lower. Financials really strong. It's probably because of the Feds and increasing rates. Discretionary is strong, healthcare is strong. It's been quite a strong week overall in the market, except for energy, which had a monster run, and this pullback was kind of expected. So let me delete these and go ahead to, and this is, by the way, our trading terminal. Is a professional tool we're building for traders, and it's basically built by traders for traders, so hopefully you'll enjoy it. Let's take a look at WIX. Let me go ahead and, so again, WIX on its way down 3 days in a row. This is quite positive for the equity market. We haven't tested the highs, and that's definitely good. Let's go ahead here, and then a SPY. This was the FOMC meeting. We kind of sold off on the news, but then Powell started talking, and I'll tell you exactly what Powell said that kind of gave confidence to the market. But ever since then, we've been going higher and higher with kind of no pullback. So we'll see if we get some kind of a pullback, but overall the trend is looking very, very bullish. Let's go ahead and go back to the deck. So, Fed increased the rates by 25 basis points. Now the projection for end of 2022 is somewhere about 1.9 to 2%. So that means over the next few meetings, over the next 3 meetings, one of those meetings is going to be an increase of 50 basis points. So this is something that as traders we need to really pay attention to, because if we get into a fast tightening cycle, that's not going to be good for equities. How do I know? Because I've looked at some historical data. So let's actually take a look at those right now. So historically, equity market usually sells off when there is tightening, but once the tightening starts, equity market usually rallies higher and higher, except for one time, and that's when we go through fast cycles. That was 1968, 1980, 1987, and 1994. Markets do not like fast cycles, and this is one of the things that is a little bit worrisome to me, especially looking at the Fed's funds rate projection at 2% by end of the year. We might see some kind of a fast cycle, so we really want to be careful. But in that FOMC meeting, Powell was we talked a lot about stagflation. Powell gave his GDP forecast, and his GDP forecast for the year is at about 3%, 2.8%. So we know 2.8% growth for the economy is far away from recession. So Powell's basically saying, hey, recession is off the table. We're gonna grow, but at a slower pace. And obviously, equity market loved it. If you saw on Wednesday, we sold off, and once Powell said that, we completely rallied, and we haven't looked back since. So it'll be interesting. Let's go ahead to next slide. VIX term structure. So VIX is now back in contango. So as you can see, the May, the June, the July, all are higher than the April expiry. So if you compare this to last week, remember VIX was completely in backwardation. That means in a short term, there's a lot of uncertainty, a lot of mayhem, right? So this is kind of something that you need to be careful. If you recall last week, I said when VIX go into backwardation, usually in about a week, we'll see some kind of a rally in equities or some kind of a bottoming action. And I think we've seen it right now. VIX is in its normal term structure, that contango looking. So things are looking a lot better in compared to the last time that I did the video. So interesting and something definitely to look for. Let's get into some idea generation. Some of the things I'm thinking about is in two areas. One is with rates going higher, I'm expecting some kind of a slowdown in housing. So I'm looking at creative ways to kind of bet against kind of housing and slow down in housing. This will be interesting. We've seen 30-year fixed mortgage rate going high at one of the fastest pace they've gone up. So this is going to put some kind of a pressure in housing market. You're going to see compression in cap rates. So cap rate, which is a really important metric in real estate, is going to go down, and this is going to impact real estate value. So I'm kind of thinking about maybe a trade, shorting some residential REITs and going long maybe cell tower REITs, storage REITs as a hedge. So some kind of a relative trade to kind of balancing it out. This is something I'm watching out closely. What do you think? Any ideas? How do you think I should short housing? Do you think it's a good idea? Let me know in the comment section. We know China was under a lot of pressure. Some of it was, risk of delisting, risk of China potentially helping Russia, and risk of sanctions that would impact Chinese stock. China's government came out and said they're going to support liquidity in their financial market, and of course their stock rallied. Can this rally continue? Can we see, BABA, who's been really oversold in the short term, KWEB, which is the ETF of, Chinese technology, really oversold in short term, kind of rally back to some kind of a normal situation, maybe touch this moving average? Could be a really good opportunity for some risk reversal trading, selling some puts, buying some calls. So this could be really profitable. Again, something to think about. I haven't pulled the trigger on either of these trades. I'm doing the research, but I kind of wanted to share this idea generation method that I do. I'm more of a top-down trader, so looking at macro environment and walking my way kind of down and coming up with trade ideas where I can, make a lot of money, of course, because that's the end goal. With that being said, let's go back and review last week. I don't know if anybody took this trade, but majority of them worked out pretty nice. So we know DocU's earning, TDoc put, Hood Lips are doing really, really well right now. They worked out great. This trade worked out. This relative trade I'm still in. It's losing slightly because, discretionary, which I'm short, was very strong this week. But overall, I'm still very confident in this trade. I'm keeping it for the next few weeks because I believe we're going to continue to see outperformance in healthcare, in utility, and in staple versus the discretionary. With that being said, for next week, these are my trades. So I'm still in that relative trade. I set up a unbalanced butterfly for Fedx earning tonight. So this could be interesting to set up. Sold 235 call, bought 245 and bought 227. So I'll show you kind of the performance profile of this, but this could be quite interesting as well. Setting up a bullish put spread on take two. I think we're seeing some kind of a reversal here. Let me bring up a chart of take two. Let's go here. Again, you can see these kind of, hammer doji kind of signaling a bottom for now. So that kind of makes sense to me going into next week, setting up a bullish put spread. So we'll see what that goes, but I'm also very confident in this trade as well. And the rest of my trades that I had from last week, I'm still keeping them on. This is how the performance profile of the butterfly would look like. Fedx has earning today. I'm kind of betting that the stock won't move as much, will stay within the 235 to 240 range, or it might sell off. That way I get to keep all the credit I collected on this trade. I have about 10 contracts on this. So, again, pretty bearish to kind of neutral on this trade. I'm betting that Fedx won't move much. Definitely in this environment, I'm pretty sure it will not gap up. That's kind of my bet, because if it does gap up and go above 240, that's where I end up losing a lot of money, right about 7K. But that's the bet I'm setting up on Fedx. What do you think? Let me know in the comment section. That's about it. So very, very busy week. Looking forward to next week. Do you think we've bottomed? Do you think stocks and equities are going to rally going into next week? Let me know. Definitely have my eyes on the market. If you want to get updated on this trade as I do on live, feel free to check out our chat room. That's where we usually bounce off ideas and come up with these trades. So check that out as well. Till next one.